So, if an insolvent company owes you money, what do you do and what can you do? The first thing you do is this. File something like this, which is a proof of debt form, and you hand it over to the liquidated administrator, the insolvency practitioner's office, with details of your claim. Now, the claim may already be there. They already have details of your claim on the system, but nevertheless, ask for a proof of debt form and get one submitted nevertheless, particularly if you're owed more than £1,000. So what can you do in terms of potentially ensuring you get some money back? Well, the answer is you can't be absolutely sure of anything of that nature, and many unsecured creditors receive absolutely nothing in an insolvency. It's an unfortunate consequence that this does happen in insolvency proceedings such as liquidation, administration. But there are still things that you can do and you should consider because they may have an impact on your return. Starting point is to recognise liquidator entities as a complete and utter stranger to the company. They know nothing about the company usually before they've taken office other than what the directors have told them. And indeed, once they're in office, what they know is down to what the directors have told them and what the records that have been delivered up and handed over, to the extent that they have actually been handed over. That is the extent of it. Now, communicate with the liquidator. Explain your concerns if you've got any. Provide evidence, provide emails, provide documents, provide contracts, provide invoices, all information that the liquidator is going to need if they are going to consider issues of your suspected misconduct and that of other creditors. Absolutely crucial. As part of your ability to participate in the process, which is essential, not merely to provide information, but you can, when called upon, form a creditors committee. You need at least 3 members, maximum 5. You're all got to be separate to attend on the committee as members and represent the creditors as a whole. The committee potentially has some considerable control over the liquidator's fees. It's not complete control. The committee can't simply turn around to the liquidator and say that you have to do what we say you do. That's not how it works. But they do have influence, they have a voice, and they have the right to be heard, and they can filter information from creditors as a whole to the liquidator. Something to consider. It will potentially add to cost because there's extra reporting, extra involvement between the liquidator and creditors through the committee, but it's something to consider. Now, if you're really concerned, what you can consider doing, no guarantees with this, but it is a possible option. If you are concerned that the person who has been appointed as the insolvency practitioner or liquidator is at the nomination of the directors, you can appoint your own liquidator, potentially. You have to satisfy certain requirements. You have to have more than 25% of the votes of creditors in order to requisition a meeting to potentially consider changing liquidator. You may have concerns about the director's nominated liquidator. There shouldn't really be any. The director's nominated liquidator is independent, objective, otherwise they shouldn't have taken the job and they couldn't have taken the job professionally. Having said that, perception of independence issues and perception issues nevertheless do still matter. They still exist, and sometimes they cannot be swept away. And as a consequence, as a creditor, what you can do is if the company has gone into voluntary liquidation, it is perfectly possible to put the company into compulsory liquidation for the official receiver to be appointed as liquidator in the first instance. Now, no sense in getting carried away with this. There are certain tests that are required for that to happen. The court will not make that order unless at least more than 50% of the unconnected and non-associated creditors vote in favour of it. It's not guaranteed to change anything. It could actually result in the existing liquidator being reappointed depending on the facts of the case. But it's something that you may wish to consider. Questions, queries, concerns, give us a shout. We know insolvency inside out.